And dear students, in the previous videos we discussed about some of the basic terms in accounting. So today we can discuss about the remaining basic terms in accounting. First of all, we can discuss about profit. You all maybe heard about the profit. So what is profit means? The excess of revenue of a period over its related expense during an accounting year is profit. That means excess of revenue over expense is known as profit. It should be belongs to a same accounting period. It should be belongs to same period. So whenever we minus expense from revenue, what is excess remaining? That is profit. Okay. Our next term is loss. Loss is just opposite to profit. That is the excess of expense of a period over its related revenue is termed as loss. That means when you taking revenue and expense belongs to a certain period of time, if the expense is more than the revenue, then the excess of expense over revenue is loss for the business. Remember, always loss comes, it decrease the owner's equity. Owner's equity means owner's capital. So owner's capital will decrease because of loss. But if there is a profit, it will increase the owner's equity. Remember, profit will increase the owner's equity, loss will decrease the owner's capital. Then next term is gain. Gain is it is resulting from something other than the day-to-day earning from irregular or non-recurring nature. So other than the normal business operation, that means through irregular or non-recurring nature, any profit if you get, that is gain. Okay, gain is a type of profit, but that profit we are not getting from the day-to-day operations, that we getting from an irregular or non-recurring nature operations. If you take it is a profit that arises from transactions which are not the operating activities. From the normal operating activities, if you are getting any excess revenue, that is profit. But other than the operating activities, from any other transaction, if you get a profit, that kind of a profit we will call the name gain. Okay. Example, gain on or profit on sale of land. When you selling land, if you get any profit, that is a gain. If you selling machinery, if you get any profit, that is gain. So remember, if machinery, we are not doing machinery business, we are doing any other business. But if the asset we are selling, we have some assets like land, building, machinery. When you selling that, from that if you get any profit, it is a irregular or non-recurring nature. From that if you get any profit, that is known as gain. Okay. Now next term is discount. Everyone heard about discount. Discount is the reduction in the price of goods or from the amount to be paid to a customer by the enterprise. So whenever we giving deduction or reduction in the price of goods or from the amount to be paid to a customer by the enterprise or by the business, that reduction is known as discount. Okay, so deduction given from the price of the goods. This discount can be of two types. One is trade discount and second one is cash discount. Okay, so discount may be of two types, trade discount and cash discount. We can explain one by one. First one, trade discount. Trade discount is the deduction in the price by the seller to the buyer of the goods when they buy goods of certain quantity or value. That means when any buyer purchase goods from a seller, seller will give some reduction. Why he giving reduction? Because the buyer will purchase a large quantity of goods. Such kind of discount we will call the name trade discount. So trade discount is deduction given from the price for increasing the quantity of sale or increasing the bulk quantity of sale. So such a case only we will give a trade discount. So trade discount is reduction in the price by the seller to the buyer of the goods when they buy goods of certain quantity or value. So increasing sales volume deduction given from the price of the product is known as trade discount. Normally remember, when we recording sales, always sales we have to record in the books in net value. How to find out sales net value? Remember, from the sales we have to minus trade discount. Balance amount only we will record as sales in the books of accounts. Keep in mind, trade discount always we have to minus from the sales. Remaining net value only always we will record as a sales. Then second discount is cash discount. Cash discount is, it is the discount allowed for timely payment of due amount. Suppose you think that we sold goods to a customer on credit. On credit means they will pay back the money after a certain period of time, suppose 3 months. But before that 3 months, if you want to get the money, we can give some discount for the timely payment or early payment. Such a discount we will call the name cash discount. If we give some discount, they will pay timely the money. Sometimes otherwise what they will do, they will extend the time. Chance is there. So if you want to get timely payment of money due from anyone, any customer, we can give some discount. That discount is known as a cash discount. So cash discount is a discount allowed for timely payment of due amount. It is recorded in the books of accounts of both the parties. It is compulsory a cash discount we have to record in both the parties, means buyer and seller. Both the book of buyer and seller we have to record the cash discount. Okay. Now voucher. Another term is voucher. When you recording any transaction in the books of account, that means in the journal, we need evidence. Okay, without any evidence we cannot record any transaction. So that evidence we will call the name voucher. So voucher is an evidence of business transaction. If you want to record a business transaction, we need evidence. That evidence is the voucher. Example, cash memo. Normally when you're doing cash transactions, we have cash memo. When you're doing credit transaction, normally we have invoice or bill. So these kind of documents which are the evidence for the transaction. Without evidence we cannot record the transaction. So that evidence is voucher. Now stock. Next term is stock. Stock is the amount of goods remain unsold in the business. Some of the goods which is remain unsold in the business, that is known as stock. You know, if you are manufacturing concern, the raw material remaining, the semi-finished goods, finished goods, these all remain unsold is a part of stock. So we can say it as a stock in hand. Okay. So stock in hand is the amount of goods remain unsold in the business. So how much goods remain unsold in a certain period of time, that in a particular point of time, that is known as stock. Stock can be opening stock and closing stock. Opening stock means in an accounting year beginning, how much goods are remain with us unsold, that is opening stock. Closing stock means at the end of the accounting period or accounting year, how much stock is remaining with us, that is, or how much goods is remaining with us unsold, that is closing stock. Okay. Then debtor. Debtor means, you remember that when we selling, the seller selling goods to a customer or a buyer, So that pays on credit, when you selling goods on credit. So that party we will call the name debtor, because he have to pay money to the business in future. So debtor is a person or an entity who owe amount to the enterprise. Who owe amount to the enterprise means he have to pay money to the enterprise in future against credit sale of goods and services. That means we already sold goods on credit. For the sold goods on credit, they have to pay money to the business. They are owe amount to the enterprise. They have to pay the money. So then we will call him as debtor. For business is concerned, the debtor is a current asset, because we will get a money benefit from them. That benefit is less than 1 year. That is why debtor is a current asset. Okay. So debtor is a person or an entity who owe amount to the enterprise against credit sale of goods and services. That means whenever a business or seller selling goods to a customer on credit, that customer is our debtor, because he have to pay money to the seller or the business. The debtor is a current asset for the business. Then creditor. Creditor is just opposite to debtor. When you purchasing goods from a supplier, so we are purchasing goods on credit from a supplier, we have to pay money to the supplier in future. Okay, so that party we will call the name creditor. So creditor is a person or an entity to whom an enterprise owes amount against credit purchase of goods and services. So we purchase goods on credit. Against that, the enterprise or business have to pay money to someone. To whom the business have to pay money is known as creditor. So these are obligation of the business to pay the money to the creditor. So that is why creditor is a current liability. Means we have to pay back the money within 1 year. So we know liability. Liability is an obligation to pay. This creditor's money they have to pay back within 1 year. So it is a current liability or short-term liability. So these are the different basic terms of accounting. Okay, just to go through the explanation once again and study the basic terms very well, then only all the remaining things we can understand well. Okay, thank you so much.